Okay, here's a trade that we have just entered. As you can see, the entry price on here is at 1202.75, shown by the down red arrow just to the left of the, or just sort of in the middle of the screen there where that yellow patch is. You can see that down arrow. We'd previously had some short trades that were combined into one, and you can also take a look at that trade on a video that we saved as well. So this trade here, you can see that automatically the NinjaTrader software has placed our initial protective stop at 1.5 above our entry. So you can see that the buy stop for 4 contracts is at 1204.25. Our exit on our first objective is at 1202 even, which is just 3 ticks, and we're going to exit 1/2 of our position at that price. When that happens, our stop will come down, and instead of risking a 1.5, which is the equivalent of 6 ticks, it'll be cut in half, so we'll just be risking 3 ticks at that point. And should the market turn around and actually stop us at that time, we would end up with a net break even. And that's our basic trade management philosophy on that, as far as protecting any move, any adverse move, once we're in the trade and the market has also reached the first objective. So obviously what we're hoping for here is some more selling to come in. The market has been pretty weak here today, somewhat surprisingly. The market had this is Monday, by the way, October 17th. On Friday, the market had a nice move higher, finished in a very strong fashion, and did have some follow through overnight. The market rallied up to almost 1231, but then turned around and ended up by opening just around the 1215 area, and we've basically been selling off since that time. So the market has certainly had a bearish tone within the context of the day time frame, and so the fact that it is traded and actually opened around the 1214, 1215 area and immediately sold off. Now, that was really a clue in the daytime frame that the sellers have really, taken over control, and we would then have the preference to be on the short side. As you can see at the bottom of our chart here is a horizontal band color. Right now it shows a dark red. Just before that it was a red, and before that it was a gray, or what we consider to be neutral. So if it's red or dark red, we will go ahead and take the short trade. It's our intraday filter, our intraday directional bias filter. So if we are looking to get in on a short trade, we will want to have the filter, the intraday directional bias, in our favor. So that's why we have gone ahead and taken this short trade, because we do have a nice setup along with the intraday, or within the day, directional biases indicating that it still has some weakness, still has some pressure on it, and of course that's why we're taking a short trade here. So been in this trade here for a few minutes. It hasn't really done much. It's moved against us, what is it, 1, 2, 3 ticks, only moved for us 1. So on a trade like this, we're not going to give it more than 10 minutes. If this trade doesn't at least reach our first objective within 10 minutes of being in the trade, we're going to just exit the trade. So we've been into the trade approximately half that time, so we're going to give the trade about another 5 minutes. If we don't get stopped out, of course, if we do get stopped out, then obviously we're out of the trade. But if we don't get stopped out and it doesn't reach our first objective within 10 minutes, we will just go ahead and exit the trade. So we're in there about 5 minutes or so right now, so we'll give it another 5 minutes and see what we get. Hopefully before that time we will hit our first objective, and maybe even sell off even more, who knows, but we have taken a short position, so we just have to be a little bit patient here for a few minutes to see if that selling pressure can actually come back in and send the market lower. By the way, all of our trades in eminidaytrader has a 6 tick or a 1.5 maximum risk. The only time we ever increase that risk is when the market becomes more volatile, and that's an option that we will sometimes take. And if we do take it, we will reduce the number of contracts we're trading. So if we've got to bump up our stop to, let's say, 2 points from a 1.5, we will then reduce our contracts from 4 to 3. And as a result, we have approximately the same dollar risk in the trade, even when the market is more volatile. And we'll manage the trade a little bit differently too. We'll, instead of just going for the 3 ticks for the first objective, we'll go for 4. And instead of the second objective being 6, we will go for 8 ticks. So that's how we make the adjustments under those kinds of conditions. But most of the time, we're going ahead with 4 contracts. That's sort of our model account, if you will. Certainly, it's not necessary for everyone who's trading with us to trade 4 contracts. I mean, we have a lot of traders that will start with 1 contract. As a matter of fact, we recommend everybody start in the sim and then build up from there, whether it's 1 contract or 2 to get started, and then use the 4, or use 6 or 8 or 12 or 40. I mean, it just doesn't matter, whatever the trader feels comfortable with. Okay, so you can see the market has reached our first objective, just got filled there, and you can see that our stop has come down. So our stop now is just for 2 contracts, as you can see, because we've obviously exited 2 contracts, so we've taken profits on 1/2 of our position. Should the market rally up now and hit our stop at 1203.50, we would lose 3 ticks on 2 contracts and be a net break-even trade. So that's the worst case scenario at this point. So that's really the philosophy on our trade management, is just to get in there, reach the first objective, and then get to break even. So the second objective here, we have an order in to buy limit. It's a type of order, buy limit, 1 contract at 1201.25, which will give us a 6 tick or a 1.5 profit. And it looks like it wants to get down there and do that, so that's good. And if it can do that, then our stop will be adjusted to break even for the remaining part of the position. If it just touches onto 1201.25 and doesn't fill us, our stop will still be adjusted down to break even. And if that's the case and we don't get filled on our buy limit at 1201.25, but it does rally up and at 1202.75, we still got 2 contracts short, we would have break even on those 2 contracts, and therefore only making profit on the first half of the position, or the first 2 contracts out of the 4. But obviously what we're hoping will happen here, now that we're in the trade, is that the market will continue lower and hit 1201.25, and thereby reaching our target and getting filled. So we'll just give it. Now that we've hit the first objective, we're not under this time frame horizon of 10 minutes. That's really just for the first objective, because that's the crucial one, because that's when we want to get our trade to break even. In other words, to reach our first objective and reduce the stop on the second half of the position, because we're only exiting the first half of the position at the first objective of 3 ticks. So if we can come down here and hopefully get filled on our second objective at 1201.25, which is what we're hoping will happen here soon. Now you can notice on our trades here, all of our trades are very clearly identified right on the chart. They have the down arrow. Okay, there we just hit our second objective, and you can see that our stop has been adjusted down from 1203.50 to 1202.75. 1202.75 being our entry price. Okay, there we finally got filled on that, and that's good. So you can see our stop is now just one contract. Because we have now been filled and we have exited 3 out of the 4 contracts that we've traded. So I'm going to go ahead and cancel this because you've got the way that the ATM or automated trade management feature works in Ninja is you have to put a target for the final 1/4 position. But I like to manage these manually, especially in cases where the market looks like it could have a potentially good move. And I will and now got my stop in here manually at the entry price. So worst case scenario now is if we get stopped on that, we have made profits of 3 ticks on the first 2 contracts for a total of 6, and another 6 ticks here on the third contract on our second objective. So a total of 12 ticks so far. 12 ticks being 3 points, which is $150. So we've locked in $150 on this trade, and should the market now rally up and hit us at 1202.75 at break even, we will break even on this final 1/4 of our position, but still block in the 3 points or $150 profit. So now if the market does continue lower, I will adjust the stop. Hopefully we're going to get some more paint bars, some selling paint bars. That's obviously what we're hoping for. That means that some good volume has come in here and allowed us to do so. So yeah, we'll just give it a little bit of time here, and hopefully we can continue to get some sell-off. Once we reach plus 3 points, if we do drop from, our entry is at 1202.75, so it would have to drop 3 full points, 12 ticks, which would be 1199.75. Now, if the market were to drop to 3 points in our favor and not show us a selling paint bar, I will adjust the stop so that we at least protect 1/3 of our profit. Should the market do that. Looks like it might have a bit of a bounce just at the moment, but we're going to hold in here. We've got our stop at break even, and we'll just hold it in here, and hopefully that'll keep us in the market. If we get a little bit of a bounce here, this point from we were down at 1270.75, and now we're up at 1202, a little bit of a bounce. But hopefully the market can come down and reach that 1199.75. Even if we do it without a paint bar, I'll be able to go ahead and adjust the stop accordingly. As I was just explaining, I would then protect 1/3 of the move, or 1 full point, equal to 4 ticks. Good to see some more selling coming in here after that little bounce. Another couple of ticks or so, and I can go ahead and adjust the stop to salvage at least 1 point or 4 ticks on this trade. Okay, the market has come in. It's good to see. Continue to move in our favor here. And I'm just going to wait and see if the market produces a paint bar on this bar, because then I would adjust it a little bit differently. Okay, this has not produced a paint bar, so I'll just go ahead and bring this down. And as I was saying, I brought it down here to 1201.75. So should the market rally from here and hit 1201.75, we have locked in an additional point, of course equal to $58. So that be added on to the 150 we've already made. So we've locked in at least $200 profit on this trade at this point. And hopefully we can get some more movement down. What I'm really looking for, what we like to see on these trades, is once we get into a trade, for example, if it's a short trade, we like to see one of our selling paint bars. In other words, a non-black bar. As you can see, some of these other bars on our chart here, some of them are blue. We have a cyan, a lime, and a magenta. Those are the four colored paint bars that we have. And when we're in a short trade, we like to see a selling bar. That is a bar that takes out its previous bar's low, and also not an inside or an outside bar. We like to see a selling paint bar come in, and then we will adjust the stop because we're short to 2 ticks above the high of that particular selling paint bar. So that's what we really like to see. If we don't have that, then we will just adjust it as I have shown here to salvage at least 1/3 of the move. And so it's moved slightly more than 3 points, but I'd like to see it, rather than just keep adjusting it constantly, I would rather see it move here at least another 3 ticks in our favor, so I can move it 1 tick, because it has moved in our favor 3.5. It moves 3 3/4, then I'll adjust it to 1 1/4, just sort of a trailing stop to salvage 1/3 of the move. Okay, good. Looks like we've got a selling blue paint bar in here. That's what we were hoping for, because when we're short the market, we like to see some selling paint bars come in. Looks like my video may have just stalled the recording. You can see the price though on the move. You can see, okay, 475, 5 points, 475. Okay. Okay, we've adjusted the scale there. I will just wait. So here we have a cyan bar come in. Okay, it's turned lime, one of our more powerful bars. So now I will move the stop. So the high of this selling paint bar at 99.50. So I'll bring the stop down here 2 ticks above its high to 1200 even. So should the market rally from here and hit 1200, we will lock in an additional 2 3/4 points, which is just one tick shy of 3 points, and 3 points is 150. We've already made 100. We've already locked in $150 on the trade, or 3 points. We can lock in another 2 3/4 points. That'd be another 187.50. So we would be locking in 150 and 150 be 300 less 1 tick, so that's 287.50 on this particular trade. Should the market bounce and hit 1200, but hopefully the market can keep selling off here, and we can continue to make some profits on this final partial. But it's been a good move down here. That 1215, been watching the videos, we've been monitoring that level. The market went up and hit it on Friday and had a nice follow through overnight, but then opened for the regular trading hours, the RTH hours here today, back below it. Okay, here we just hit our stop at 1215. So okay, we've locked in $287, or just shy of 6 points, 5 3/4 points total on this, for a total of $287.50 on this particular trade. So That's how we like to trade. That's a good trade. We're happy about that. So thanks for watching.